Welcome to the Treasury Whisperers Talkcast podcast, your go-to source for insightful interviews and dynamic panel discussions in the worlds of treasury, banking, payments, fintech, and much more. Here now is your host, the Treasury Whisperer, Seth Marlowe.
Hello, Whisperees. Joining me today in the Whisperer studio is Marcia Klingensmith. Marcia is the Banking Modernization and Ecosystem Strategy Leader at Candescent. Candescent serves more than 1,300 banks and credit unions, representing over 30 million registered users with their cloud-native intelligent banking platform. Marcia helped shape how the platform shows up in the market through modernization guidance, ecosystem strategy, and partner enablement. She brings more than 20 years of experience across Tier 1 banks, global payment networks, and fintech platforms. As a speaker, Marcia is valued for her practical inside the bank perspective and her ability to create shared language across product, risk, and commercial teams. Her sessions resonate with executives who want to move forward confidently, align stakeholders, and turn modernization ambition into execution. Lastly, Marcia has a Substack blog, The Instant Edge, which is positioned around payments modernization for financial institutions. Marcia, welcome to the Treasury Whisperers Talkcast podcast.
Hi, Seth. That was a great intro. Thank you so much. And I'm excited to be on your podcast today.
Well, glad to have you, and we'll jump right in. I want to introduce you in sort of another way. Didn't have it in the introduction, but I know that you've got a bit of your own personal brand. You refer to yourself as the Instant Payments Maven. I love that Maven word. So maybe a little bit about where the origin of that.
Yeah, that's a funny story because initially, like a couple of years ago, I was on the stage. I think it was the Currency Research Conference, and I was on a panel sitting between Mr. Open Banking and Payments Elsa. And we were joking ahead of time, like, what's your moniker? And I was trying to figure that out. And at first I was thinking the Paymenteer. But then I had a coach, and the coach is like, oh, you're just the Maven on this instant payment stuff. And I'm like, the Maven. Yeah, that's right. I'm the instant payments Maven. And sometimes I go by the payments Maven because the scope of what I encompass is pretty broad as the industry evolves. But the instant payments Maven is kind of what's stuck.
I love that story. Yeah, there are so many of us. I want to gather all of them together. I mean, we could have a conference just of all the people that have got brands or monikers that are being used in the industry. So the other thing I wanted to ask you about, because as I looked at your background, I noticed that you were one of the co-founders back in 2011 of PayCLT in Charlotte. So maybe you could tell us a little bit about that organization and what led to getting that started those years ago.
I'm very passionate about emerging technology and bringing people together to share emerging technology. And kind of with the way PACLT got founded or started, actually, Raj Bose, who works at EY, was kind of like the original originator, but it died down. But I started out by taking his distribution list, and I would meet at Amelie's bakery in Charlotte, and I'd say, who wants to talk about geeky payment stuff over coffee? And so we started out with just like a couple of people, and their stories were so fascinating. And so what I would do is I would write up a little summary of our conversation and send it out to the distro list. And I'd say, hey, if you guys are interested, come to the next coffee chat. And so my coffee chats grew from like 4 to 8. At one point, I had 150 people showing up for one of my payments events. We actually had to move that into RevTech Labs, which is also in Charlotte. It's an incubator hub. And as my Fridays grew, I ended up getting volunteers to help me facilitate that. And then that was when I was living in Charlotte. And eventually I moved to California. And so these 8 o'clock coffee chats were at 5 o'clock in the morning, California time. And so I kind of dialed it back. But at that time, I had such a great volunteer base that folks like Dean Nolan stepped up and took ownership of the PayCLT community. And so it's still very alive and active today. It's got a New York equivalent to NYPay, and they sometimes collaborate. But PayCLT is very embedded in the Charlotte community, and in fact, they have an event coming up on the 6th, like a coffee chat. And so I'm involved. I still help source speakers. When I moved back to the East Coast, I got back involved. But I'm so proud that my little baby kind of grew up and it
Yeah.
left home and it now has a life of its own. And I'm just so very proud to have been a part of, helping the community grow like that.
No, that's great. I love when people talk about what we do as part of this community, because I personally think it's a great community of people that are in banking and payments and fintech and all the worlds that I tend to live in. So from what you were saying, so you were in Charlotte, you went out to California, and you're now back on the East Coast. Where are you now?
Yeah, I live in Bluffton, South Carolina, which is kind of a tech desert. We're right outside of Hilton Head, and so we
Nice.
moved there during COVID. All my family is East Coast. When I was moving, it's like I wanted to be accessible to family, but I was also thinking, if the world ended tomorrow, am I living where I want to live? And I love California, but there's pros and cons for being out there. And I was very embedded in the community out there. They had the Bay Pay Forum, which if you're living out in the Bay
Mm,
Area, Daniel
sure.
Chatelain runs that, and it's an amazing community. So definitely a great place to get plugged in if you're out in San Francisco.
Great. So you made a big job switch earlier this year. You landed at Candescent. So tell us a little bit about Candescent and the role beyond what was in the introduction.
Yeah, well, I'm very one of the reasons why I was really excited to take a role with Candescent is because they are fulfilling the vision that I had of helping small and mid-sized financial institutions on their modernization journey. So 2 years ago, these used to be NCR Digital Insights, which is a small bank,
Mm-hmm.
a digital banking platform for small, mid-sized financial institutions. D3, which is the digital banking for larger FIs, and Terrafina. So these three platforms are coming together behind the scenes to create this one new platform. We're building best in class architecture, real time data layer across the footprint of these 1,300 financial institutions, enterprise security hub across that footprint. So if a bad actor comes in, we'll be able to spot it in one channel and block it someplace else. We'll have real
Mm,
time, we're building real time insights about our customers across the call centers and the branches and the online space. So we'll be able to provide AI nudges. We have an enterprise security payments hub to orchestrate across all the payment rails, whether it's instant payments or ACH, or as tokenized deposits and stablecoins become more important. Financial institutions will, but just by being our customers, they're going on their modernization journey. And so I'm on the marketplace team. And so I'm empowering these financial institutions to innovate. So on our marketplace, we vet all sorts of fintech partners and we integrate them to our platform. So we take the best in class partners in every capability a financial institution could want, vet them, and then integrate them. And so for a financial institution who's one of our customers, for them, it's just a matter of like, what capability do I need? Is this something I want
mm-hmm.
for our customers? How much do I want to charge for it? What does my go-to-market strategy look like? So we're really taking all that research and integration, all that heavy lifting off of them and doing that for them. And so they can just focus on the things that they're good at, focusing on serving their customer needs, focusing on the business. And so we're really going to empower them to compete against tier one banks and fintechs, and then also start, abstracting away from their core,
Right.
their legacy
No, it's
cores and get something more modern behind.
so important. And I find certainly from working with middle market and then, down into the small and medium sized businesses. I mean, they're just looking for so many things and they don't have the time to be dealing with all these one-off vendors. The more that could be embedded directly into their banking platform, so it's one-stop shopping for them, it just makes their lives so much easier.
Exactly. And some of the priorities for us are like business banking because the
Hmm.
business customers for financial institutions have been vastly underserved. So we're going to make it easier for financial institutions to meet the needs of their business customers and also wealth management because as baby boomers retire, there's going to be this whole generational wealth shift. And so we're also going to empower our financial institution customers to be in a better position to support their customer base as that money movement, as that shift of wealth happens.
Well, I'm sure that's keeping you very, very busy these days.
I love meeting new people. I love, learning about all the new technologies out there and figuring out how all these pieces come together to better serve our customers. So this is something that really gets me up in the morning.
That's great. I know with your focus on instant payments, let's jump into instant payments a bit. I know that you've written a bit that Treasury as a part of the banking world, rather than retail, may actually be the place that determines the next era of instant payments. Why Treasury? Why do you see that?
Yeah, instant payments has been around it's for almost 9 years now with the RTP network, and even FedNow has been around for 3 years, and countries all across the globe are adopting instant payments. In the US, we have things like Zelle and PayPal and Venmo that are really addressing the consumer use cases and the consumer needs. So there's not really an urgent demand for instant payments on the consumer front. And businesses have been struggling with payments for years, right? Like there's so many things to take advantage of. But for example, instant payments empowers businesses with the ability to provide the control and timing and transparency over transactions. And also with the ISO 20022 data, you have the ability to put rich information about a payment into that transaction. And so we know that a lot of businesses still write checks. One of the
Mm-hmm.
reasons why there's a lot of checks written is because with a check comes the ability to capture a lot of detail, right? You can explain, hey, I'm not doing a full payment because I didn't get a full shipment, or this thing was broken, so it wasn't what I wasn't what I was expecting. And you can't just include that information in ACH. So the rich data that goes with the payment allows the communication between institutions to be much richer. And so that leads to things like automated reconciliation. So now when you send a payment, the receiver of that payment can automatically match it. So you don't have to have a manual intervention. Fraud detection is a huge thing, because now that you have more standardized, well, from a couple fronts. One is because of the standardized messaging, you can now apply AI and fraud analysis to the data fields to do better analysis and
Mm-hmm.
detection of that. And then also, bad actors like to take advantage of the gap between when a payment was initiated and when a payment was received, and they like to exploit that. So, it reduces the fraud. And then there's I was talking a little bit about the 30-day window. So having
Mm-hmm.
precision control, like what I found in talking to businesses, they're not as excited. It's like, oh, faster payments. I don't really need to talk faster to my vendors or partners for bigger businesses, but the ability to control that payment. So with an ACH, it's batch. It happens at the end of the day. Maybe they receive it next day. Maybe it comes Monday or 3 days later. When you take advantage of the discount window, you like what I would have heard is that oftentimes businesses are reluctant to do the early pay because they don't know if they're going to get that discount or not, because they don't know when the payment's going to arrive. But if you could precision time that payment, then hey, I'm going to take advantage of this discount, and they can play with their funds and time their payments so that optimize that liquidity, optimize those payments so that everything can get there exactly when they want. It also helps with forecasting. So if you do instant payments for your payables, your receivables, the more of your payments that are instant, the better your forecasting is going to be. So that if you're waiting for a check, it's like, well, where's my funds going to come in? When can I use those funds? But if it's instant, it's irrevocable, and you can immediately redeploy those funds someplace else. So it empowers bigger businesses to make better financial decisions about how to use those funds when they arrive. So I think the big things are like fraud detection, reconciliation, personalization, but there's a lot of really good reasons that can transform the way businesses are done. And this is something that businesses are hungry for. Like,
Mm-hmm.
they don't know to say, hey, bank, can you get me instant payments? Or maybe they do, but on the financial services end, they don't always know. I don't know what that thing is, instant payments, or I don't know how it works for me, but there's still a
Yeah.
gap between business needs and what the financial services are.
Yeah,
Financial.
sometimes you have to listen for what they're saying. Like, oh, well, I have checks for certain vendors that, I generate the check, but I hold on to them for 2 weeks before I actually mail these out because I'm waiting. I think one of the challenges that where I think there still needs to be a lot of catch up in the broader ecosystem is the ERP systems are still very much batch oriented. So until they've caught up to being able to initiate payments in more of a real time or an instant way, there's still a gap there. I think that needs to be
Address.
fixed.
But it's, I mean, yes and no. I mean, yes, there's a lot. ERP systems are one of the hurdles, but with APIs, there's different ways to address that. For
Mm-hmm.
example, I know a good friend of mine, Lori Burns, she's developed this solution called Ruby 5 that integrates with NetSuite and empowers a NetSuite user to set up some of their preferred vendors with real-time payments. So that through APIs, there are solutions and ways to integrate with your ERP platforms to initiate those instant payments. So there's a lot of providers that are working to make those connections and empower those businesses to do those instant payments. But the problem is, like, if a business wants to initiate a send payment, in the US, we have about 9,000 financial institutions, banks, credit unions.
Mm-hmm.
But of those, like, less than 2,000 are on the instant payments network. And of those, like, maybe 100 are configured to actually let their customers send. And even the ones that are enabled for send, and that can enable their customers for send, that does not mean they're exposing that capabilities to their customers. Sometimes they have it set up and their customers still can't use it. And so the hurdle I see is not really, I think the hurdle is not really on the ERP side. Really, the hurdle is on the financial institution adoption side.
Mm-hmm.
And so if we don't have the financial institutions empowered to offer instant payments, our business customers are never going to get access. And so it doesn't matter what the ERP systems do if the financial institutions aren't going to offer it.
I think you might actually refer to this as the receive only rut.
Yeah. It's so okay. So the big reasons, there's a number of reasons why financial institutions aren't adopting instant payments. It's like nobody's asking for it, But people are asking for it. People are using it. A lot of businesses like PayPal, Venmo are making money off of this stuff.
Mm-hmm.
So then they're like, well, we don't know how we're going to use it at our FI. We don't know what use cases, business cases. So we got this confusion. But really, there's definitely clear, especially on the Treasury side, right? Being able to initiate a vendor payment. That's huge. But the biggest hurdle I see is the fraud concern because
Mm.
in this day and age, and we're seeing our fraud numbers just like skyrocket. I think in the article you're referencing, I was citing some fraud exposure rates. AI is just really making it hard for us to detect and prevent fraud attacks. But the thing is, with instant payments, it's actually a much more secure way to transmit a payment because the fraudsters like to act between the time when a payment is initiated and when it's received. And with instant payments, we've closed that gap. So if you can put really good fraud prevention measures up front, things like device intelligence, your KYC, your step-up authentication,
Mm-hmm.
biometrics. It's preventing fraud is more about layers, but in order to do that, I talk a lot about the real-time data layer, right? In order to prevent a fraud attack or in order to, to really work with instant payments, you need to have a real-time data layer. So this is real-time insights about your customer, real-time insights about their financial status, like do they have the funds, what's their current balance, and then real-time data signals. So it's really important to kind of build this structure. Also, a tool that I find really empowering for financial
Mm-hmm.
institutions when they're facing this is there's this risk framework that I created. I call it the SAFE framework. And
Okay.
SAFE stands for
Mm-hmm.
settlement, authentication, fraud and exposure, and economics. But the idea is this is just a basic risk register where banks do a brain dump and say, hey, what are all these things we're afraid of with instant payments? What do we think is going to happen? And you can bucket them into those different categories as a starting point, but you can add any other fear you have. And then you go through and you say, well, how do I mitigate this fear? How do I mitigate this risk? What do I do today? Because financial institutions, they're dealing with ACH, they're dealing with wires, they're dealing with checks. They have processes in place. And so with this risk register exercise, when they're looking at their fear and then they say, well, what do we do today to combat that kind of exposure? And then they say, well, does that work for instant payments or do we need to do something different? And so then it's an incremental change that they need to make. But what I find is that when a financial institution goes through this risk register, they're like, this isn't completely new. Like we deal with this all the time. And really, it actually, this will work for us. And so it just kind of, it gives them confidence to know that it isn't a big unknown. And then the second thing is it exposes like where their systems might be a little bit weak, like where they're behind on modernization. Because what I find with the fraud, like I was at a Faster Payments Council meeting, the spring member meeting, and I was attending the fraud panel. And one of the things I heard is that the fraud protection measures that a lot of financial institution uses today are really kind of outdated. They're from like 10, 15 years ago. When financial institutions are modernizing their system, the fraud and identity side of the organization tends to get left behind. And I think part of it is because it's these systems are very complicated. They're not visible. They're not tangible. It's hard to understand like where the value is. Whereas like a CRM or a UI update, it's like everybody can get on board with that. And so what's happening even outside of instant payments is banks are really getting exposed to these bad actors because their fraud systems are so far out of date. So, I would definitely recommend, again, shoring up your fraud and identity solutions, looking at that real-time data layer. But what that safe exercise does is you're going to find out, it's like we're checking for fraud, but we're checking after the transactions happen. We're doing like this batch review
Right.
later, right? And
Might be a little too late for that.
yeah, if you're doing an instant payments, that's obviously the wrong place to do your risk assessment. You want to do your risk assessment before the money moves. But then maybe because you're using outdated technology or you don't have a real-time data layer, maybe you're not empowered to do that risk assessment up front. And so what these exercises do for you will help you understand, like, well, maybe your system needs to be a little bit more modernized before you take this next step. But there's partners out there. I know people always feel landlocked with their core, but just because you have a core that's still using 80s tech does not mean you can't do modernization. On top of that, there's a lot of third parties out there that are helping financial institutions bridge that gap. So definitely that's something that you want to explore.
So here's a question, Marcia. And as I think about this, and I've looked at actually at a lot of these type solutions over the last several years, and it's wide ranging. It's fintechs that are in the space, and it's also infrastructure entities. I mean, Nacha has their Fixius program as an example. Are we at the point where, it's probably past the point, where we need like a national registry of all bank accounts that could be a rail that has all of this information, that every financial institution and corporate for that matter that wants to tap in can go in, ping it, and check to see that the information is legit and that it's a valid legal entity. It's not been known to have fraud. It's, funds are good. I mean, what do you think about that?
Wow, actually, that's a great question, and I don't know. I probably haven't spent as much time thinking about that, but so in Europe, they have open banking, which enables them to do the to detect, like to identify the account owner before a transaction goes. So there can be when customer initiates a transaction, they get a little pop that says, hey, did you really mean to send it to Jane Joe? And if it's not the person that they're expecting it to, that will stop them in their tracks to say, hey, wait a minute, that's not who I'm sending that transaction to.
Right. Oh,
And
and
of
by the
course,
way, that account was open 3 days ago.
2 days ago, yeah, all the social engineering scams. And we can't do that in the US because we do not have the same regulation that allows that. Is a centralized database the right answer? I don't think so. I mean, we have a lot of concerns around privacy and then, maybe trust issues with the government. Like who would host that database? Directories are going to be hard. And I
Hmm.
know there's groups working on that. But what I'm a big advocate of is the QR pay code. So X9 came up with a new standard late last year that's really exciting because with the QR pay code, you can safely embed a payee's details in the QR code. So it's not exposed to the human eye. You're not exposing customer account information. You can specifically put like the recipient, the amount, and none of that is manipulatable. And so when a user scans that code, like all the right information's there. If they want to change the amount, there could be a field in the UI to update that to the right amount. But that way you're ensuring it's getting to the right recipient, it's getting the amount that you want, and it's a push. And if we talked about that rich data, that QR
Hmm.
code can embed a lot of that rich information. It's like, well, what was this payment for? Was it, were you purchasing goods? Maybe you could put the line item detail in that QR code. There's all sorts of really interesting things that could go into that QR code, which makes it a great tool for like invoices, maybe at
Hmm.
point of sale, if banks start embedding a reader, because you would want to do that in a secure experience. So, I've seen Payfinia has a great user experience that, I've had the opportunity to look at, but I'm sure there's other providers out there that are doing something similar. But I see that as a way to help address our concerns around exposing account data and making sure that the payment is getting to the right recipient.
Great. Well, we're not going to solve that one today. That's for sure. Or if we are,
Right. Yeah. Yeah, exactly.
yeah. So, I want to talk to you about another probably well underutilized at this point capability in the instant payments world. Really, I think everybody's waiting for this to become a useful thing, and that is the R lowercase f capital P
The request for
RFP, the
payment?
request for payments,
Yeah.
which embedded in RTP, embedded in FedNow, and there's some fantastic use cases around that, particularly on the receivable side. What's it going to take to get this on every bank's roadmap?
So, request for pay, I think part of the challenge that we're having with adoption is, first of all, in order to offer request for payment, you need to be enabled with send. You have to have
Yep.
defined gone through your risk register exercise, identified your use cases, put your operational procedures in place so that you feel comfortable with send. And then with a request for pay, so that then on top of that request for pay, you need like a user experience, which is actually where I think the QR pay code could be super handy.
Hmm.
Where I feel like it plays a more important role is because, while instant payments are not ubiquitous, you need to have other payment options available, because if your end user is not on the network, you're going to have to go by ACH or card or debit or some other payment method. And so like the QR pay code can empower that experience, can start that experience. The other thing is, with the request for pay, when we talk about customer adoption, like you need to do micro changes, right? People don't jump immediately to new technology. You need to start
Mm-hmm.
in environments where people are comfortable. We're starting to see broad use of tap and pay with the card and with the phone. And people do scan QR codes. So that's why I see QR pay codes is kind of like an easier path, because people are comfortable scanning
Yeah.
QR codes. So when we talk about requests for pay, the experience has to be integrated in a way that's comfortable and natural for people to adopt. But there's no standards yet around what that RF request for pay experience looks like. Although it is being, I understand it's being tested actively in small pockets, and they've had seen some really great successes. So yeah, but it's kind of like the chicken or the egg. It's like you need infrastructure and adoption. So you need things that will accommodate the fact that it's, that we're not ubiquitously on instant payments yet.
Right. So moving along in the instant payment world, the other bright shiny object that's out there is stable coins and payments that will allow us to leverage that blockchain technology to get payments done not only within the US but certainly as we look at going cross border. Are banks ready for that? I know I the conversation is so out there. And
Yeah.
my first instinct is, okay, well, if you're talking about stablecoin, how's your instant payment journey? Are you up on FedNow? Are you up on RTP?
Yeah, it's so funny. Like banks are so risk averse and, but like because with the Genius Act, they've signaled that
Mm-hmm.
stable coins are really important to our administration. So everybody's trying to figure out like, what does this mean? In my opinion, like if we talk about risk levels, since banks are all about risk mitigation,
Mm-hmm.
right? At the bottom of the risk pyramid is instant payments received. Like it's not risk free, but it's extremely low risk to receive an instant payment transaction. It just goes into your account and there the funds sit. So then the next level of risk is send because, you have to make sure you're mitigating risk before you initiate a transaction. And then next, and it's very important to figure out your strategies for these guys before you get to stablecoin, because if you don't have a solid foundation, anyway, so the next on the pyramid is the tokenized deposits. Tokenized deposits are taking advantage of the blockchain. You have the benefit of the programmability. So it has a lot of the benefits of the stablecoin, but the benefit of tokenized deposits is that it is a closed loop network. So a tokenized deposit is just a conversion of your existing deposit asset or another asset, but it's within the bank's network. So if you have a bank that's both in the US and overseas, and a business customer, say Walmart, wants to get money to their overseas account with their same bank, it's really easy to do that 24/7, but
Mm-hmm.
it's a closed loop network. So stablecoin, the benefit of stablecoin is that it's open network. I can send to anybody, anywhere in the world 24/7. But the challenge with stablecoin is it's in the wild where you don't have full control over the endpoint on where that coin is going to land. And there's a lot of scenarios where you're not going to have that KYC at the endpoint. I remember hearing
Mm-hmm.
this podcast thing about somebody walking into a Philippine cash office with their little stable coin. They showed their number. They walked out with $50,000 cash, didn't have to show an ID, and it was all anonymous. And
Uh-huh.
financial
Yep.
institutions, that's not acceptable, right? We need to have control over the destination. And I know everybody's trying to figure that out, but that's still an open question. And then, of course, the other challenge with stablecoins is somebody else is holding your deposit assets. So, for example, if you're offering a Circle coin, which is one of the more genius favorable stablecoins, like Circle is taking your deposits and they're putting it in their bank, and their bank is the one is the one managing and making money off of it. And in the meantime, that customer's funds are out of your deposit account. So the nice thing about tokenized deposits is you get to keep those deposits on your book. But because tokenized deposits are typically closed loop one bank, now we're seeing popping up recently, like in the last month, things like the Carry Network. We have FIS has created a network. We have SoFi that just did an announcement about theirs is kind of like stable coin. We have Custodia Bank that has like tokenized deposits. So there's a bunch of organizations that are stepping up to try and build a tokenized network between banks to make that
Mm-hmm.
interoperable. But we're kind of like reinventing. We're kind of having to reinvent all the rules again, right? Like, how do we
Aren't
do
we?
the fraud? How do we do the KYC? How do we prevent money laundering? How are we going to do the ledgering? And so one of the things that we're tracking is the Bank of International Settlements has this project Agora where they're kind of proving this for us. And so and they're working on building this template so that we can see what a best practice interaction looks like. But where I see the industry going, at least from a financial institution perspective, is the more pragmatic way is to look at doing the tokenized deposits. I think that's it because of the programmability and because of the ability to, tokenize not only your deposit assets, but your mortgage and, loans, all your investments. There's a lot of interesting things that open up, but the really important thing is to be able to control those endpoints. And so, yeah, so there's a lot more that we could talk about there, but I'll just say, in my opinion, stablecoins are not the safest path for financial institutions at this point in time. I'm really excited to see the interesting work that's evolving around these tokenized deposit consortium networks, because I think that's going to be a better direction for financial institutions to explore. But I also think, given that financial institutions are so far away on their instant payment strategy, my recommendation is also figure out the foundation. You shouldn't be playing with tokenized deposits if you haven't figured out what instant payments receive and send looks like, because that's lower risk than those tokenized deposits. If you don't know how you're protecting your customers, protecting your dollars there, you're not ready for tokenized deposits.
Well, I think that's great lead in for my last question for you, which is if you were sitting at a round table of a group of bank CEOs, what would be your guidance to them as to how they prioritize all the things that they need to do in this day and age?
Yeah. Well, it's so that's the modernization journey. These legacy cores are really an encumbrance at this point. I had an article I wrote a couple of years ago about the cost of legacy architecture. And with fraud and AI, you can't afford to be on legacy architecture anymore. So you need to figure a path forward off of that. And one of those ways is kind of building this middle layer where you can start abstracting your data so that you can get off your existing core onto something a little more modern. So, start looking at the bottom up, because with AI, you can't even do AI analysis on one of these fractured cores, some of it batch, your little modern capability silos. It's very expensive. AI and token use, this is another topic too, but AI is going to be super, super expensive for financial institutions in general, but it gets an X factor more expensive if you're not doing it on a foundation that's already normalized. If you're trying to stitch different systems, your AI costs are going to be out of this world. So for every reason that's out there, start from the bottom up and start your modernization journey.
There's so much to do. For all the worries about jobs going away from AI, I think all the modernization efforts, unless AI is going to do it for us, and I don't think that's going to be the case, I think there's going to be a lot of people in banking who are going to be working on modernization for years.
I have some strong perspectives on the future of work. I was thinking about doing a Future of the Work Fridays, maybe a once a month thing, because I have a lot of opinions about where that's going, but that's for another day.
All right. Well, count me in for that, Marcia. I love that idea. Marcia Klingensmith, the instant payments maven. Thank you so much for joining me here today in the Whisperer studio.
It was quite a pleasure. Thank you so much, Seth. Thank you. This has been
Absolutely. Fun. So that's a wrap for us today, Whisperees. You can now help support the Treasury Whisperers Talkcast podcast by becoming a Patreon member of the show. See the show notes for details on that. Until next time on the Treasury Whisperers Talkcast podcast, I'm Seth Marlowe saying bye-bye for now.
Thanks for listening to this episode of the Treasury Whisperers Talkcast podcast with Seth Marlowe. The Treasury Whisperers Talkcast podcast is produced by the Treasury Whisperer Studio and Treasury Whisperer LLC. Copyright 2025. Any rebroadcast, retransmission, or account of this podcast without the express written consent of Treasury Whisperer LLC is strictly prohibited.